Okay, it is February the 4th, Sunday evening, a little bit over an hour after the weekly open. Let's do the market outlook and plans for the week ahead. So this week's outlook is probably going to be pretty short. There really isn't a whole lot to cover. As far as my higher time frame plans, everything's still intact and nothing's really changed. We're clearly in a bit of a risk-off stage right now, so it doesn't really make sense to be gambling too hard this week. But let's go ahead and get into it. So to start off with the events, there's no events to really worry about. The main thing to be paying attention to is reading spot flows and waiting for some signs of exhaustion from the spot supply, because spot sellers are very much in control right now. And until that changes, there's almost certainly going to be no signs of risk taking. So let's go ahead and get into some stuff. Start off with the higher time frame. This is the doodle that I put together on the Tuesday stream, and I'm very much inclined to think that this is how things are going to play out. There's a couple of scenarios that aren't doodled on here, which we'll cover, but essentially I think that going sideways, another kind of attempt, a stab at the lows, is probably where I'm going to try to pivot back to being optimistic and bullish again until we see this clear stab into the 38 down towards 36K region. I'm going to be definitely leaning towards risk off with how I'm trading. So the plans for higher time frame remain the same. I think that the trend is up and that we're ultimately going to see upside resolution. It's just a matter of how long does it take for this range to resolve before we get an impulse out of the range. If we do for some reason see a move towards 32K, the risk definition for longing 32K is just absolutely immaculate. So if you get that opportunity, you want to take it. But I really don't think that we're going to get that. I think that 38 to 36K is going to be the support that holds, that leads us towards the upside move. But at the end of the day, I don't have a crystal ball, and I don't really know how far spot sellers will drive this market down. Again, if we get 32K, you want to bet on it because the risk to reward is just so favorable that even if you're wrong, it's still going to be a massively plus EV bet. So as far as higher time frame goes, the core plan that we've been talking about for a while now is if you get under 38K, we should be able to trade towards 32. If you get over 44K, then we should be able to trade towards 54. Those are still the core kind of directional plans. In the meantime, though, I think that just sideways right here is the ultimate pain for market participants. So that's probably what's going to happen. Just continue to chop people up. People got so complacent with trading momentum in Q4 that seeing the cope and the pain on the timeline has been a little bit entertaining. I'm not going to lie. It's crazy how we get a little taste of momentum and people can't ever kind of realize that momentum doesn't ever last for very long, that, the majority of the time the market's going to be sideways. So accepting that, understanding that is definitely an edge. So that's pretty much it for the higher time frame, right? TLDR, continue to go sideways. I think that ultimately our resolution will be upwards. Whether we break down or break, up first doesn't really matter to me that much. I can definitely more comfortably pack on a lot more risk in the 32K region, but I really think that 38 to 36K is going to be where the risk-taking opportunity is. And who knows how far up we trade down later into this year. Price predictions for that are really pointless. You just got to play it by ear, and don't be a predictor, be a reactor. Let's go ahead and jump into the medium time frame. For more information, check out the Paragon group with the link below, where I cover everything from how I trade to how you can develop your own style. Just a couple of things to cover here. So I do think that we're going to continue to trade downwards. Two kind of key areas on medium time frame that I'm interested in paying attention to are going to be the mid 40K region. Basically, this impulse candle, which has some singles, which overlaps with the anchored VWAP, which overlaps with the value area low for the composite range that we're trading in. This will be a key area where I would be looking for a kind of dead cat bounce trade. So essentially trade down into this region, fill out the void a little bit, bounce from it, and give us our next dead cat from lower high type of scenario. So I might take this reversion long into the next short. From a medium time frame standpoint, these are the two kind of trades that I see coming up later this week. There's a potential that we just trade down into the 38K region. 38K is really strong support. There's a massive amount of overlaps in this area, so this could be a pretty prime swing long territory. So that'll be something I'm definitely looking for. If we start to get below 35K, then I think that that's kind of wrong, and that we'll probably trade all the way down into the 32K region at that point. So risk definition is pretty loose with the 38K. That's really the only downside, is that the risk reward isn't really that favorable. Just because your stop loss, like from a hard stop standpoint, it's going to have to be a little bit larger than I would normally prefer. So because of that, with how I handle all my trades, I'm going to be placing heavy emphasis on manual risk management rather than letting myself get hard stopped. Hard stops definitely a big no-no in my book. So yeah, that's pretty much it. Definitely paying very close attention to the Coinbase discount again. If this starts to thicken out at all, then that's obviously going to be a pretty rough sign. On lower time frame, it does look like the Coinbase seller has been loading up the ask again, but it's not really going to matter too much until we get into the New York session. So definitely Monday, New York session, want to pay very close attention to the seller. Just because they don't sell right at the open doesn't mean anything. A lot of the time, particularly over like last week, when the Coinbase sellers are coming in, they're not coming in at the beginning of New York. A lot of the time, they're coming in much later into the New York session. So don't get hung up too much on when the open is, et cetera, et cetera. I think that's kind of bait for people. Just because they're not selling at the beginning of the session doesn't mean they won't sell later. So that'll be my main focus for the week as far as flows go. Going to be placing very, very heavy emphasis on reading the Coinbase and Binance flows for spot. I'll keep an eye on Bitfinex as well, but mostly going to be on Coinbase and Nance. So that's pretty much it for the week, guys. Good luck out there, and I'll see you at the stream. Cheers.